Thank you everyone for joining me. I know how valuable your time is during this time of year. Just want to let you know before we even start, this presentation shouldn't take more than a half an hour, at which time, of course, we'll open it up to answer any of the questions that you posed in the questions box. But we want to make sure that we're very, very, very respectful of the time. But at the same time, this information is extraordinarily important. So we're very happy that you joined us today. So what we're going to cover during this particular presentation is as follows. First of all, why all the buzz about security? Why are we hearing so much about it this particular year? And we're going to go delve into why it's so important that way. Then, with regard to security protocols, what is literally being expected of you as a tax professional? After that, we'll cover how to go about meeting your security obligations. So we're not even going to talk about just what's expected, but how you can go about meeting those expectations. Then we'll talk about potential ramifications for non-compliance. For people that choose not to adhere to this, what's going on, it's very important to understand what the potential ramifications are, and we'll finish up with some final thoughts. Again, this shouldn't take more than a half an hour, but we believe this information is extraordinarily important as you face the tax season. So let's go ahead and talk about why the buzz, why all the interest in security? Well, security within the professional tax preparation industry is absolutely nothing new. It's really been in place for a long time. In fact, professional tax practices, regardless of your size, you can be a smaller operation, a larger operation, doesn't matter. They're all considered to be financial institutions. And as such, they're required to adhere to the expectations concerning security of data that was enacted by the Graham-Leach-Bliley Act. That's the GLBA. You may have heard of it, you may not. But what's really interesting about it is that this has been in place for a long time. In fact, this act was put in place back in 1999. And what it says is financial institutions must take steps to keep their customer data safe. And obviously, financial institutions encompass a lot of different things. So it's really important to understand that not every financial institution is created the same or serves people the same way, but they are all responsible to take steps to keep their customer data safe. Now, the Federal Trade Commission is actually responsible for the oversight. So one of the things that's very interesting is that certainly you have to answer to the IRS and to other government agencies as a tax professional. But in this particular instance, the oversight to make sure that people are keeping their data safe is actually the responsibility of the Federal Trade Commission. Okay? Now, what's very interesting about that is the Federal Trade Commission implemented what they call the FTC Safeguards Rule. And that's a vehicle to create and maintain consistency for non-banking financial institutions. They have other rules that they put in place for, as an example, banks or mortgage industries, people in the mortgage industry, whatever it might be. But for non-banking financial institutions, they have a very set safeguards rule that they expect people to follow. So the FTC Safeguards Rule states the following. First of all, it requires the covered financial institutions, such as you folks, anybody that's in this particular industry, that they need to develop, implement, and maintain an information security program. Now remember, this was initiated way back in 1999. The initial safeguards rule took effect in 2003. So even after the act was enacted, they then put this rule in place once FTC was responsible for oversight. So back in 2003, they put the safeguard rule in place, expecting everyone to adhere to it. What's very interesting is we all know things have changed between 2003 and today. And because of that, the FTC Safeguards Rule was actually amended in 2022 to keep current with changes in technology. The same technology is not in place back in 2002 that's in place today, so therefore changes or updates had to be made to the FTC Safeguards Rule. The updated Safeguards Rule actually went into effect this last June. So June of 2023, everyone was expected to begin to adhere to this. And of course, this is the first tax season since then. So guess what? That's why all the buzz about this security and the need for people to update their FTC Safeguards Rule or be adhering to the updated FTC Safeguards Rule. Okay? Please note that the requirements of the Safeguards Rules are designed to be flexible, noting that every single business has a different size. That being said, the safeguards should be implemented that are appropriate to the specific size of your business and correlating circumstances. It doesn't mean that you don't need to have a safeguards rule or follow the safeguards rule, but they will look a little bit different, or the administration of it will look different based on the size of your business. But it does not alleviate your responsibility to make sure that you are following the FTC Safeguards Rule. Okay, so what are these expectations as part of this FTC safeguards rule? This is such an important piece, the upfront expectations. First of all, the FTC safeguard rules, the requirements for information security program for people in your position are as follows. First of all, you need to create a written information security plan, and this is oftentimes referred to as a WISP. You'll hear people refer to it as the WISP, which describes your program to protect customer information. You're going to need to create this written information security plan, meaning that you have documentation. It needs to be documented. It can't be something that you just simply say, oh, we've got this covered. Instead, that has to be a written information security plan. And on top of that, every single tax practice has to designate a qualified individual to implement and supervise this WISP. On top of that, you need to identify and assess the risks to customer information in each relevant area of the tax operation. And in doing so, you need to evaluate the effectiveness of current safeguards and controlling said risks. This is a very important piece. So you have to have a written plan. Included in that written plan is the idea that they have somebody that's designated to oversee it. But on top of that, the big piece about this is to identify the places that could be at risk. And then how is it that you're going to go ahead and make sure that you're going to do everything you can to minimize that risk. Continuing on, for you as a tax professional, there are some things that you have to understand as it pertains to the quote, design and implement safeguards to control your risk. They're going to include the following. Please note, first of all, you need to implement and periodically review the access controls. On top of that, you need to know what you have and where you have it within your tax practice. So important, especially if you begin to have preparers that are working remotely or you're working remotely, all these types of things. One of the things that, one of the reasons the amendment that took place, so the updates that were made in 2023 or took place this last June, is that we know that this business is changing and more of it is being done in a mobile environment. Okay, you need to implement multi-factor authentication for anyone accessing customer information on your system. And you'll note that when you're using our program, as if you were using any other program as well, it's built in. Multi-factor authentication is literally built in order to access, our software. You need to encrypt your devices, and you need to dispose of customer information in a secure manner. Finally, you need to anticipate and evaluate changes to your information system or network. You need to maintain a log of authorized users' activities and monitor for unauthorized access. So as you're running your business, you're responsible for doing all of these things to make sure that you're adhering to the FTC safeguards rule. Continuing on the piece that says how it is that you need to design and implement your safeguards to take risks, includes some additional things. On top of that, you need to regularly monitor and test the effectiveness of your safeguards. You'll need to be able to document the fact that you have done this monitoring and test it for the effectiveness. You need to train your staff. You also need to keep your information securely programmed up to date and create a written incident response plan in case something has happened. If something did happen, if there was a breach of some kind, a breach of your security, what will happen is that you'll have to have some kind of incident response plan. And you need to monitor your service providers. All of these things are expectations as part of the FTC safeguards rule. So one of the things that we want to do is say, like, great, that's all written out. It says got to do all these types of things. But what can we provide for you folks to help you meet those expectations? So going about meeting your FTC safeguards rule, we have some advice, and this is the most important piece. As you're creating these things, take a look at the following. To better prepare your tax practice to meet the expectations, start by doing the following. And the first thing we talked about is read the IRS publication 5708, which is all about creating a written information security plan for your tax practice and accounting practice. I'm going to go ahead and toggle very quickly. And you'll see right away, if I go up here, the first thing is the 5708. I have bookmarked this, and every single person who has a tax practice should should take the time to review this document. The 5708 is extremely detailed, and you'll notice through the table of contents, it covers all the things that you're responsible for. Next up, by the way, this publication was really meant to help not be just large businesses, but small businesses as well with their written security plan. Then there's also read IRS Publication 4557, which is Safeguarding Taxpayer Data, which will help tax preparers understand basic security steps and how to take them, recognize the signs of data theft or how to report data theft, and respond and recover from data loss, and understand and comply with the FTC safeguards rule. So you start with your 5708, but also IRS Publication 4557 will help you out as well. We're going to go ahead and toggle and look at this one. The publication 4557 is also worth noting. It's 22 pages long. It too has a table of contents covering all the different things that it has, including a glossary of terms. Please make sure that you have bookmarked this one as well. Review the resources found on the FTC Cybersecurity for Small Business website. So we've given you two that came from the IRS. We know that the FTC is actually responsible for the oversight of the expectations as far as security is concerned and the safeguards rule. So they too have a site that they have that is of great value. We'll go ahead and toggle into that one as well. And you'll notice that cybersecurity for small business really does go into tremendous detail, literally talking about all the different things that can happen and your responsibilities to be secure. So between these three sites, the publication 5708, publication 4557, as well as cybersecurity for small business is found through the FTC. All three of these will give you a true roadmap, if you will, on how to create your WISP, your written security plan. Okay, so create and implement your WISP, but do so after reviewing all the aforementioned information that we just provided for you. On top of that, look to meet all the requirements. Do not overlook any of the requirements in the FTC safeguards rule. That's where you can find yourself in a little bit of trouble, is if you do most of them, but you don't look at all of them. Do your best effort to make sure that you're adhering to all of the different things. It is not in your best interest to take lax with regard to your approach with regard to these types of things. One of the things that we have to say is we know that this is here to stay. You know, when things were updated this last year, it's not that it's a one and done or it's a flavor of the month, that type of thing. We know how important security is. We all do. And with regard to all the stories that you hear about security, theft security, all that type of stuff, fraud, all those things, one of the things that we realize is that the FTC is overseeing this, that this isn't going away. And in fact, we believe that down the road, there'll even be more updates made and more expectations of you. And we'll cover that at the end of this, but it is important to understand that you look to meet all of the requirements of the FTC safeguards rule. Now, when in doubt, always look to take security steps to prevent identity thieves from gaining access to both your client's tax information as well as your computer system. That's common sense anyway, but please, with regard to data, especially people's information, all of your taxpayer information, that is so important to take extra steps, and when in doubt, always err on the side of precaution, okay? Now, on top of that, there are other basic security steps that you can take. So first of all, tax professionals should consider these additional steps to protect their systems from identity thieves. First of all, use separate personal and business computers. One of the things that we oftentimes have seen in the past is people using the same computers for their personal business as well as business. It's highly recommended that you keep those things separate. So use separate personal computers, mobile devices, and email accounts. On top of that, do not send sensitive business information to personal email devices. Do not use a personal computer or device to conduct business, including online banking. Do not use a business computer to surf the web, engage in gaming, or video downloading. Do not move data by way of a USB drives or external hard drives between personal and business computers or devices. And change passwords often, but always at least once every 3 months. Do not reuse passwords of devices and applications that contain business information. All these seem to be very fundamental, but they're so important as you're running a professional business in which personal data is involved of your tax-paying clients, okay? Now, the IRS also recommends that tax professionals take these steps. So on top of everything associated with the FTC, the IRS also has its recommendations with regard to security. And they include learn to recognize phishing emails and smishing text messages. Install anti-malware and antivirus software on all devices and set it to automatically update. On top of that, back up sensitive data to a safe and secure external source. Encrypt all sensitive files, emails, especially those with any taxpayer's personally identifiable information. Limit taxpayer data access to individuals with a need to know. So one of the things that we want to make sure you're doing is closing your computers when you're done. Only people that have a need to know should be having access to taxpayer data. Monitor e-file applications, PTIN accounts weekly for total returns filed using your eFINs as well as your PTINs. And deactivate unused eFINs. It's only in your best interest so that somebody else can't get a hold of it. Now, one of the things that we like to add to this is what are the ramifications? You hear about all the things that are expected to be done, but please, let's take a moment and realize what happens if you decide to take a lax approach with regard to the security of your data. First of all, the ramifications are if a tax professional does not implement and follow the FTC safeguards rule and then has his or her system breached, you know what? Some or all of the following may happen. And this is so important to understand, and it starts with the FTC itself. A fine can be imposed up to $100,000 per violation of the safeguards rule. And guess what? The FTC can't possibly be monitoring every single situation, but when something happens in which there's a breach, they are going to be all over that. They want to set examples, as they should. And so with regard to that type of thing, the fine is not minor, $100,000 for each violation. On top of that, there is a very real possibility of lawsuits from impacted customers. If you have your security systems breached and it is found that you did not have a safeguards or following safeguards rules with regard to this type of thing, you are opening yourself up for lawsuits. And finally, it's very important to understand this is going to all equate to going out of business. If you have your system breached, you do not have a security plan in place, the chances of you surviving that will be very, very minimal. You will be in a situation where you will probably go out of business, which is a shame. So the ramifications are serious if you choose not to follow the recommendations of that we are providing for you and adhere to the FTC safeguards rule. Now, our final thoughts before I turn it over to John to see if you have any questions, please note the following. Security of client information has always been a part of running a professional tax practice. We know that. But you know what? We also know that it's getting more and more important, especially as the industry is becoming more mobile. Okay, regulatory oversight regarding the protection of personal data has been in place for a long time. What we're seeing that's different is updated expectations or protocols, and we're seeing those because the industry is changing. To people that have been in this a long time, you know, it was always brick and mortar. They always came to your office, you locked everything up. And so much more is now the data is being secured in the cloud, or the data is being secured or expected to be secured by you in a different way. And because of that, the protocols have changed, and those updates aren't going to go away anytime soon. In fact, updates will continue to happen. Please note that the greater the mobility that's out there, which is really what the industry's moved to, there will be greater regulatory concern. And this means the expectation of adhering to security protocols will not be going away. And in fact, they will be getting stronger. It is very much in your best interest to adhere to current policies and be prepared to adapt to future updates in this regard as well. Now, that brings us to the end of this presentation.